All right, good afternoon, traders. Welcome to the Bookmap Academy meeting every Thursday. We do this. It's all good afternoon, traders. Welcome of our Bookmap Academy program. This is it. This is the coaching and mentoring, the trade review session that we do Thursdays at market close. The way it works, for those of you who are new, let me just go through it. And we have a few housekeeping things, but we're going to jump right in to the coaching here. The way it works here is click on the More button from bookmap.com on the toolbar and go to Bookmap Academy. That's under Community here. Basically you apply here. You click on Apply and it'll scroll you down the page here, and you can input your name and your information. We need your Discord name as well. That's important. And then you'll once you apply, you've applied for the Junior Academy to begin with, and you'll start creating content. You will document it in a spreadsheet. Basically, you'll get an email after you apply, and you'll need to go to our Discord channel and request a spreadsheet. When you do that, you start documenting your spreadsheet. Just copy and paste the image into the spreadsheet and put the date on it. It's really simple. It's really straightforward. The more notes that you put in there, the more that you're going to get out of it. Now we'll give feedback on it. If your content is good and your journaling is good, and you meet a certain threshold, you will be invited to the Junior Academy, and that is a testing ground at that point. You have a month, or if you can stay in it and do it the next month, but you have to meet a threshold and of quantitative and qualitative quality to advance to the Bookmap Academy. Now, once you get to the Bookmap Academy, Bookmap is free. You can double your quota and you can get the MBO bundle for free or other add-ons. So that is the program here. Now it continues, so that's basically step 1, step 2, and then step 3 is you can become a coach here. In the academy, you'll give feedback on Junior Academy applicants, and if you do that, you get Bookmap and Global Plus for free and the add-ons, and you also get market data for free. If you want to continue the process, you can. Your coaching is good. We like it. Everyone likes it. Why not become a Bookmap Academy streamer? We have Doug and Tom that are already doing that. Moby was doing it, but he has stepped down. Anyway, this is the process. If you're interested, you'll get extra incentives as a streamer. So sign up if you're interested. All right. Let's go through the disclosures, and I have a couple things to show you, and then we'll get right into the coaching. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, one more thing. Pair your Discord name with your email, your bookmap.com email. You will get access to beta programs and other freebies, exclusive events and other services, enhanced services. You can use your phone, just take the screenshot here with the QR code and fill out the form. It's as simple as that. Let me show you, for example, what you will get. So we have a new anchored VWAP that you guys can get access to. It is in beta only, but let me show you the I'll share this here. We just uploaded this. It's unlisted right now, so only those that have the link will get access to this. All right, so let me put it into the chat. Okay, there you go. Let me just briefly show it to you. Okay, come here. We have a new footprint tool as well. I'm actually accessing it right now. You will get free access to that as well for now. All right, so all of these great new tools that we have, you will get access as an Academy member. Here's the anchored VWAP. let's just turn it on here, and I'll get rid of some lines. And then you'll just right click in here. So basically find an area of interest, right click on that area, create an anchored VWAP right there. And there it is. Okay, so now let's go into the anchored VWAP, and you can put on a standard deviation 1 and 2, and then also you can input your own as well. So we'll put 3 on, for example. And there you go. All right, so as you can see, this anchored VWAP worked pretty well off of this swing here, and coming up into basically 3 standard deviations and some pretty volatile stuff back and forth in here during this little period, the last hour. But it kind of held the VWAP, kind of went a little bit below it here, but right back up. So anyway, great stuff in here. If you want access to it, sign up for that academy, and you'll get your access. Let's see, I think that's everything. We're going to go over slowdowns. He's a coach here, as you guys know, and we'll start right away. All right, so let me put up his screen. Is this working for everybody? Can you see it?
Yep, we can see it, Bruce. If you could even go ahead and enlarge the first image there, and
Okay.
I can work through the notes.
Okay.
I guess I'll just say hello. It's been a couple weeks since I've done one of these, so if anybody's new, I'll reiterate my own personal disclaimer kind of thing. I never pretend to have all the answers, and I will only provide feedback based on my personal experience. I think that's important to say, and happy to be back. So today we're going to start off with Robbed, who is a newer member of the Academy. Overall, Rob, I think Robbed, I'm not sure, if your name is really Rob or not, probably is. But either way, I think it's cool how you're displaying a simple image in the Bookmap Discord, but then you're also providing a link to your Notion kind of more in-depth analysis. And that's really, really interesting, because when you get in there, you kind of see there's a lot going on, and taking the time to kind of reflect deeper on each trade, I think will ultimately improve your consistency. I've put a link to Rob's Notion file in this document that I'll share at the end of the meeting, but we're going to kind of comment on the image that was shared in Discord and leave some of the additional stuff for the time being. So this was the image that was shared, and we can see he's got a checklist open in the bottom right corner, which is fantastic. It looks to be kind of a continuation checklist that he's kind of tweaked and altered a little bit to make sense to him. That's fantastic. My main comments on this image would be, primarily like in a continuation setup, it's beneficial to see the initial breakout or the impulse that kind of kicks off the move. This allows us to not only gauge the size of a potential measured move, but it also allows us to measure the relative volume in both the breakout and the pullback. And I think that's really important. We're kind of missing that in this screenshot. We kind of start at step 3, like when the move is being absorbed, but we don't really know where the move came from and what kind of volume it's moving with. Like, we want to be able to gauge that and see, just what we're working with in terms of a continuation setup. That being said, like, if you're using the checklist add-on, another thing that I'd recommend is try using those sliders that are built in there. We notice Rob Davis is getting really good at this. He's grading his setups in real time while they're kind of underway. And one of the advantages to that is then you can go back after the fact when the move is either played out or failed, and you can kind of compare what was your read in real time versus what is your read in hindsight. When you're moving those sliders and you're grading at a 6, a 7, an 8, a 9, does it still look that way when it's all said and done? I find sometimes we can get really myopic, but being able to compare that real-time analysis versus your hindsight analysis can help you kind of spot patterns and inconsistencies when you're moving forward. So I think it's great you're using the checklist. I would say use it a little more, and then reflect back on that at the end of your image and just see, like, looking back, was this really, a great setup or anything like that? Just something to consider. But all in all, like, your extensive journaling in the Notion is really fantastic. It gave me a lot more information about this trade. about what you're looking for. And I specifically like that you added a kind of if, or, and then sequence to your journal. It says something along the lines of, if the pullback is 50% and hitting the overnight low and high liquidity is being added, then, you know, you're kind of building yourself like a data sequence of if, then, you know, then that, I guess, is what it ends up being. All in all, really cool. I think like we can give you feedback based on the order flow. Like we see absorption down near number 3. We see liquidity being added on the ask at the pullback. We see all kinds of things in there that we talk about on a regular basis. But I just think having a little more of the left side of the image, if we see a little bit more what happens on that first initial impulse at the beginning of your checklist, it would allow us to kind of gauge the entirety of the move a little bit more accurately.
Do we want to turn the mic on for Rob? There you go.
Hey, Bookmap family, how you doing?
Hello.
Hello.
Hey, Rob.
Hey.
So
what do you think?
Yeah, what do you think? Give us some feedback on what you're looking at here and some of the comments that Slowdown gave you.
Yeah, no, it's very good. I'm trying to get better at providing more context. So I definitely took notes on that. I will be working better at my images. I am on the Notion doc putting a little bit more information. Like I have a section called context of trade. But you're right. In the image, I could back out a little bit more and show the setup. And yeah, I'm trying to use a checklist like that, but some of these setups are so quick. I would totally miss the trade if I was messing with the sliders. Do you have any kind of advice for that? Because sometimes just so focused on a trade, if I started kind of messing with the checklist and moving stuff around, I feel like I wouldn't be able to catch the trade, or my attention would be split.
I mean, I fully understand and recognize where you're coming from. I think the more you do it, the more second nature it kind of becomes. The other thing about this particular checklist is your entry is not really technically until number 6 on your list, right? So you can kind of like in your mind, you can say like, have we seen step 1? Have we seen step 2? You know, and as it's developing, you can at least kind of plant it in your head, like this setup is slowly starting to accumulate. You don't necessarily, you know, if it's too much to do the sliders in real time, that's okay. But maybe just start by doing it in hindsight and looking back at it and filling out those sliders. And then as you do that, you know, a few times and then a few dozen times, all of a sudden you'll start to know exactly what you're looking for. And you might even adjust, you know, the checklist. You might create more or less steps based on what you're determining is kind of valuable in what you're seeing in your real world experience. But, you know, I wouldn't say like, don't distract yourself with it, but I do think like the more you do it, the easier it becomes. And, like, you know, cause you kind of, you know, there's a lot going on in the markets and it can be hard to stay focused and sharp at the same time. So, you know, but I think like taking a few minutes to grade it, maybe even just after the fact to start with, you know, I think you can kind of learn a lot. I've noticed Rob Davis is doing that, and like I look at how Rob grades it, and it's interesting. You get a lot of hindsight analysis, but you get a lot of insight as well into what the other person's thinking. So, you know, I don't know, find a system that works for you.
Got it. No, that's good. That's good. I definitely will practice that a little bit more. What did you think of my entry? I'm looking at the right trade. So I got in like around 6, but I also noticed where the POC kind of does that step down. That might have been an entry too.
Yeah, it kind of depends. So like 6, where you're entering, if we go directly adjacent to the number 6, you are kind of entering at like the previous pivot, which could provide some resistance. So like breaking below that and retesting back up where the VPOC does shift down, like you are clear of that one particular level of resistance. You're also clear of the liquidity that was added to the bid at that point. But again, that's kind of also hindsight, right? Like if you look at where you've got number 9 labeled, Like we do see a lot of liquidity being added to the ask. It is absorbing price. There was a discussion in the last meeting about absorption versus exhaustion, and to me that looks like absorption. We have buyers, they are trading, they're trading into the liquidity, and they're not getting anywhere. So like, it's easy to sit here and say like, oh, I would have got short at the top and sold it at the bottom. But when it's playing out in real time, it's not always that clear.
Gotcha.
I
Okay.
would say that like directly to the left of number 6 would be your kind of initial resistance. And so like entering right around there, could get a little dicey, but in this situation, it seems to have worked out.
So if you're looking for a continuation setup, are you trying to be free of the VPOC?
I might be the wrong person to give you my feedback on VPOC because I spent quite a long time studying it, and I do not use the VPOC migration anymore as a tool in my analysis. I understand that the VPOC is where the volume is. People will also say, in a trade, if you're looking at it from a volume profile standpoint, the volume is your resistance. So passing through that center volume point, that like you could make a case for that being like a level of resistance, a high traded volume, but I've kind of discarded VPOC migrations from my current analysis.
Gotcha. Okay.
I just
Like,
go
I was
ahead.
going to say, all VPOC really means it's just showing you where the most volume is traded, right? So the fact that it shifts down, it could have traded 5 more contracts down there. It could have traded 5,000 more contracts down there. The initial shift itself, like if you can create a strategy out of that, that is maybe something to explore. When I did a lot of back testing on it, when I tracked it, when I followed it, it wasn't giving me an edge. Because, if we bounce at 4987 and we go back up to 4990, you're going to shift back up again. And then what do you do?
Mm. All right. Well, I guess to summarize, at least with the journaling, so try to show a little bit more context, a little bit like where the trade originated from, and when I'm taking a trade, try to use the sliders to really kind of gauge and because right now I'm kind of going just like very basic with these two variables make it A plus, these two variables make it B plus, but using the sliders is gonna give me a lot more to work with.
I think personally, my opinion would be that the sliders will help you develop a better understanding of this particular setup. Whatever checklist you make, the more times you go through it, the more you will understand and adjust it. And in terms of like capturing the whole image, this one's easy to say we're missing a bit of the picture because your checklist starts on number 1, but your image starts on number 3. So there is a natural section missing from the image. Again, I do think your Notion documentation is amazing. And on that note, like I hope you are using a template in Notion to put all that information in there. I'm not sure if you are, but just another thing Bruce always talks about is avoiding the burnout. Like the journaling was so thorough that it needs to be sustainable as well. Like it's great to have really thorough documentation, but find a way that you can do it where you can keep up with it to the point where it doesn't feel like a huge inconvenience to be doing that type of journaling. If that makes any sense.
Oh, yeah, I have a full setup. I mean, it's a complete template. It's pretty in depth.
Yeah, okay. I
And
figured based on what I was looking at there, I was just hoping you had one. Because,
yeah,
the last thing you want to do is burn yourself out making 5 or 6 of these images and then, kind of give up on the process.
I will say this, and I don't want to take up too much more time. But I will say that being part of the Bookmap Academy has actually really helped with that. Like before I joined, I really struggled with journaling. It was a thing I didn't want to do. But now that I have this academy and I know, hey man, if I do a good job at journaling, there's a good chance I'm going to get called up and get some feedback on my trades. It's really like that resistance almost gone. So, but that's very noted. And I will say to other traders, I definitely, if you're interested, I could share these templates with you. But it's just having this template, just click a button, everything gets inputted, and I just drop information in. So super helpful.
Awesome.
Okay.
Bruce, do you have any comments?
Yeah, I had a few comments about your setup. So which is great. I mean, you've got your customized setup, and this is what you. It's kind of based off of the flag, uh, and but it's a little bit different. Um, I think Slowdown mentioned it earlier on. The strong volume, relative volume. I mean, I'm not really seeing it in here, or maybe there's something previously over here, to the left, but this isn't really shouting out too much to me um, about the relative volume in here. In fact, I see kind of the opposite, to be honest. Like um, the here's your consolidation. Here's your pretty strong volume. Here's your pullback. Now, there's no liquidity up in here, but and then you beautiful follow through, and again, strong volume. And it is a low volume pullback. Now, it's not really the flag pattern that we covered. I mean, because this pulled back, all the way back to the line here. Nonetheless, it my only comment is just keep an eye on the strong volume. This is what moves the market, and then look at the pullbacks too. Relative volume here.
Got it. Yeah, I guess when what I interpret, I define as strong volume was that initial momentum leg, which Slowdown mentioned that it's not in this image, but it would be to the left. That was a pretty strong impulse move into that high liquidity around like number 3. That's what I meant by strong volume going into there, and then that pullback up to the VWAP was pretty light volume in comparison.
Okay.
So that's what kind of signaled to take that move. So that's that initial impulse leg, pretty strong volume. The pullback was pretty light, came up to the VWAP, and that's when I took my short position there.
Okay. Okay. Well, anyway, just those are my comments.
Well, thank you. Thank you.
Yeah, so to summarize it up, let's make sure we capture the whole image in the screenshot, and then it'll be a little clearer.
Definitely, will do. Thank you. Thank you, Slowdown, Bruce.
Let's see here. Let's move on to the next one.
Yeah, so next up we got JYF Trader. Now he's doing video stuff. That image is not necessarily from his video, but it really reminds me of another time in my life. He's got some crazy heavy metal guitar solos ripping throughout the video. Rather than play it, it's about a 4-minute video, 4.5-minute video. I'll just give you some brief feedback about it, JYF, and then if you got anything to say, that's cool too. So I guess I'll just quickly read through what I've got written here. While the video is entertaining and it moves with pace, it seems like for the large majority of it, you're highlighting more of a price map of where we go rather than highlighting the order flow behavior around those levels. So I would focus a little more on the behavior that happens once we get to those important levels you've identified. Example, is there support on the bid and ask? Is there absorption, exhaustion? Is there high volume on the breakouts? Is there low volume on the pullbacks? What is the reaction to the areas you've noted and highlighted? For example, at the 40-second mark, you have a reject VWAP comment, but we also see liquidity added really aggressively to the ask, and it applies a lot of downward pressure to price at that moment. Another quick example, you mark data release at the 1 minute 20 mark of your video. And what we really see there is the book goes completely dark. All the limit orders get pulled, and that just means price can move really fast because it doesn't have to make a lot of transactions along the way. So you're noting that VWAP's rejected, data's coming out, but perhaps maybe point out the order flow events around those levels and those areas of interest to you. I did notice you do that a little bit more towards the end of the video. And I think that's where the real value in Bookmap lies. Like, anybody can see the price map on the traditional candle, but the order flow behavior is kind of why we're using Bookmap. And we want to make better informed trading decisions with that. So again, like, Bookmap is an order flow tool, and the point of the Academy is to really analyze and assess that order flow and see if you can find a way to turn it into, you know, like turn it into a strategy, or give you some more information to make an informed decision. All in all, like, I think you're doing great. Like, you've obviously put a lot of time and effort into the production value. Like I said, the music's fun. It moves quickly. There's not a lot of talking, which is great. But you know, maybe when you get to those areas that you're marking out as important, just make one or two little comments on what the order flow is doing at that area and how you could potentially use that to make a trade. And that's kind of my feedback there.
Okay. JYF is here. And I'm sorry, I posted it in there if it's okay, others can get access to that link.
Oh, absolutely. Can you hear me?
Sure.
Yeah, we can hear you.
Yeah, slow down. Yeah, thanks for the feedback. Yeah, I'm totally 100%. It's interesting. That particular video was kind of like one of the days that I didn't take any trades, but I saw a lot of different action going, you know, throughout it. So I wanted to kind of, you know, have it for more of a journal purpose, you know. I follow with the Trader Lab a lot, and so there's you know, kind of the narration of what's actually happening, and so I just wanted to basically try to bring that in. And it's funny you actually mentioned too that I actually went into better detail towards the end of the video. And part of the process here is that there's two things going on. One is that obviously I'm learning how to trade and, you know, to look at price action, all these different elements. The second thing is actually I'm learning how to actually do the video better, you know. So you'll actually see that actually happen progressive through some of the stuff that I've done just because of that. And I actually do have a lot of different ideas to actually refine it even further down. You know, so there's more to it. I mean, one of the things I'd like to have happen is that I'm still able to capture pretty much, you know, a majority of the price action in Bookmap, you know, and have it videoed out. But now I'm going to be using like bookmarkers to actually, you know, like you that's what the thing, you're skipping around different, you know, markers. And, you know, I just want to have different markers where then I can get in and, you know, look at the specific trade or areas of interest. And I will get more detail as I go on. And I definitely agree with what Slowdown was saying there. Because I even look back at it and I'm thinking, oh, I could do that. I could add this and I could probably focus more here. But again, and then eventually what I'm going to do too is that I'm going to look at certain areas, you know, either if I have traded them or haven't traded, I'm going to look back and even probably put narration in of the risk reward of a certain entry and where my stops would be. And, you know, whether that makes sense as well.
Yeah, I think like you're doing a great job and you've already made a huge step forward. I remember I think I covered one of your first submissions and yeah, I mean, you've gone miles since, you know, like just watching this video play here, like I noticed when we got to you marked out yesterday's low a day, we transacted through the liquidity, we absorbed it, and then it was added right back on to the bid, supporting the price for the reversal back up. And that kind of information is really valuable too. You know, Trader Lab's great, and there's a lot of talk in there about structured trades. But for the purpose of the Academy, like we want to see the structured trades supported by the order flow.
Yeah, I know. And I think I totally agree with you there. And I do see when I'm in the Trader Lab, I think there is, you know, kind of, well, because the thing is that usually kind of they go through the sequence of what importance of how they look at things. And generally, obviously, when it comes to order flow, it's kind of like last the list of entry and what they deal with. And I think order flow, obviously, this is what, you know, or book back it is. And I think that definitely, you know, should be presented, you know, with more, well, with what I'm doing here, I'm definitely gonna, you know, put that more into here. Because like you were saying too, with absorption, and even like with, you mentioned the one thing about the data drop there. That was, you know, I mean, I don't know. I mean, I guess I get to the point too, is where, you know, I understand exactly what's happening at that point, you know, and then I think I even said that I was anticipating taking a trade during that period and there was a setup there. But unfortunately, knowing that the data was going to drop, there wasn't enough time, you know, between actually taking the trade, and the data to actually make it, you know, a risk reward, you know, in my mind to actually do it, you know, so. You even see at the end there's that one when we got to the VWAP, I went and I took the trade, and then all of a sudden I'm just like, I got stopped out and I was done, and I actually closed my computer down, and then I come back and I look and I'm like, oh man, it reclaimed VWAP. Then went and took out the high a day. I'm like, yeah, that figures. But at that point, I was kind of burned out at that point, so I couldn't really stare at the screen any longer.
Yeah, that makes total sense. I'll add one small comment from my personal trading experience. I spent quite a long time in the Trader Lab, learning from Tom and learning a lot about volume profile. And I didn't, and we're all a little different, right? We're all wired differently. We're all programmed differently. We all see things differently. And I didn't make the leap in my own personal trading until I really, really the order flow. And I started spending a lot of time with Bruce and in his webinars, and I started doing a lot of replays. And I started, much like we talked with Shark Baloo, I had a setup, but it needed to incorporate and be supported by the order flow in order to take it. And when I started doing the market that way, I got to be honest, like it just changed. Everything changed for me. And all of a sudden, your patterns are there, your trades are still valid, but having the order flow support it just stopped me from getting run over as much as I used to. And so, take it with a grain of salt, though. Like I said at the beginning of this, I think it's important that everybody pursues the path that makes the most sense to them and what they can really connect with. And if you're connecting with the volume profile and the Trader Lab stuff, great.
Yeah.
Just see how it works when you really look at the order flow at the time those setups are happening.
And that's the good point, is that generally I look at at those points of interest, and I'm using order flow completely basically to make the decision. And, I'm also making, decisions too. I use the volume profile kind of like more to evaluate the risk reward between, different areas. So I'll actually use a lot of the concepts to see, what different, resistance or, potential, what my ability to, for example, is just, if I'm going to take a, 2-point stop, at least I want to, be able to get, 3 or, 4 points out of the move. And if I don't have enough distance between, different areas, with the volume profile, then I'm not even going to take the trade, So, but yeah, I mean, I agree with you on that. There's some other things too with the Trader Lab I'm still trying to figure out. I know that Tom pushes 2 lot, it's like you take one there, and I don't really do that. I haven't, if I'm able to, read, the market and make sense of the trade, then I'll do it. But at this point, basically, I'm pretty much good for, mostly just a 1 lot situation. And maybe just because the fact that I can't read any farther ahead, when I actually get into the entry. So, but yeah, I agree with you. I think I'll definitely, probably way more on Bookmap. Honestly, another thing too is just, I'm going to have to get, the MBO bundle, because one of the things that I do kind of rely on that I actually don't use is stops. And I know that Iceberg, indicator would probably help me out for a lot of the different places that I actually get involved in the market. And that information, I assume that it's there because of being able to read Bookmap, because you can see the volume dots and then just the price action itself. But I think there's just more in there that I know I would benefit from with these, trades that I'm putting on.
Yeah, so if you're trading minis, the MBO bundle can pay itself off in, a point or two. If you're trading micros, it takes a few more, but something to consider, give it a shot. The other thing last thing I'll point out here is order flow exists on all time frames too, right? Like whether you're going for 8 ticks or 8 points, you might be looking at different elements of the order flow. You might be zoomed in or out at a different level, but it's like, just find where you fit in. And I think that's so important. Like, find out where you fit in the picture, where your risk reward fits. And that's what you're doing, right? That's what you're talking about.
Yeah, and that's very interesting you say that too, because I think one of the things, and I notice this happens to a lot of people, especially with the Bookmap, is the fact that, because there's just so much information and you're in the moment, that literally, like, you can get just consumed in literally just like 4 ticks, of movement, and then just watching that, rather than kind of getting lost that you're actually looking for a higher time frame type of move sometimes. And you constantly have to step back and go, okay, where is my trade? Where is my target? What am I looking for? At this certain point. And that definitely was something when I first started Bookmap. I mean, I really had to step back because you could just kind of, you know, you kind of get a little overwhelmed with all the little minutia, you know, blips that are you can see in Bookmap at some point. I mean, there is a strategy, obviously, for trading, you know, for, you know, ticks or, you know, that sort of thing. But unfortunately, I mean, I would probably actually like to know how people do that. At this point, honestly, my stops are generally set to like, you know, at least 2 points.
Yeah, well, I would recommend come hang out with Bruce on his webinars Monday, Tuesday, and Friday, because
Yeah.
Bruce does a great job at looking at multiple time frames. Sometimes we're zoomed out to a 5-10 minute window. Sometimes we're zoomed right in, and just start watching, start following along, take a few notes, and then see where you fit. Like, I mean, in a perfect world, I wouldn't want to risk more than 6 ticks, but for my own personal trading style, I found more success taking a slightly wider stop and
Right.
allowing the move to wiggle out. But it took me a while to get there. But like, come hang out with Bruce, come watch these webinars, and like, it might look like a bunch of blinking lights and stuff, but after a month or so, you kind of have an idea what's going on.
Oh yeah, I agree with you. Look at, I mean, I've watched more webinars than, I mean, look at, I went through a lot of the Bruce's. I've gone through pretty much almost everything that the Trader Lab, because quite frankly, with him, it's kind of, he can be kind of, Tom can be kind of ambiguous with some of the stuff that's saying. And unless you've actually watched a lot of the stuff for a while, then all of a sudden you're like, okay, now I understand where he's coming from. Bruce, yeah, he's pretty straightforward. I see that right away. He's definitely good at, putting that content out. That's for sure.
Yeah, I don't know about that Bruce guy.
Last comment I'll make towards you, JYF, is that one thing you'll notice about watching Bruce, and sorry to talk about you, Bruce, while you're here, but it's not always clear. One thing that I really stuck with me when I started following the order flow and started watching Bruce was that sometimes it is clear. Sometimes you can have a higher percentage outcome based on the information you're receiving, and sometimes it's kind of not. And if the order flow is not clear, that's information in itself, right? That means maybe it is time to sit out. Maybe it is time to make another cup of coffee. And just knowing that, like, there are times when it clicks and there are times when it just feels like a mess. And seeing that in real time really helped me as a trader kind of realize that, what everybody says, it's not always your time, right? So I gained a lot of value off of Bruce being not speaking in certainty, understanding that as somebody who's been reading order flow for as long as him and can do it as easily as him, it's not always that clear. And so I gained a ton of insight from just that piece of the puzzle. Like, sometimes it's there, sometimes it's not. And if it's not there, that's okay. Just wait until it is.
Yeah, I absolutely agree with you on that one. I mean, look, there's a lot to learn, in this entire, a lot of people have a lot to add. I mean, the other thing that I really have to add is that I'm actually looking into really trying to learn more about the footprints and look at that. I know there, I actually was looking over on like trying to translate some of the stuff from, sorry about that, some of the stuff from India. But unfortunately, it was very difficult to try to follow that stuff along. So, but no, that's kind of what I'm looking at right now, anyway.
Okay, but we'll go over more of that. I think what Slowdown is talking about is really, really important, of like filtering out the bad stuff, because there's a lot of bad stuff out there. We don't know. It's not like there's a setup all the time. So this is where we're learning here in the academy and also in the coaching. Like, have a checklist. Make sure you go through and mark up your checklist. It's going to be so helpful. And then the next step after that, and identify these elements, just like Rob was doing, and then this will help you for your starting to filter out. It's like, well, it's not setting up. Okay, well then I'm not going to do anything, and then that's golden. Just take the good stuff and leave the rest. The checklist hopefully will help. And Rob is, I think, next. So let's move on to Rob, because he was doing that, and would love to hear what Rob has to say. Yeah, it's a little weird hearing myself in the third party all the time in here, but like at least in the last conversation.
You're becoming our little cult leader, Bruce.
Yeah, I'm like, who's he talking about? I don't know who's he talking about. So, um, it's like I'm right here. Um, so let's good one though, JYF. I just have one comment on the videos. The videos are great and they're entertaining, but they're a little too zoomed in. Maybe I mean, like the question is like, how much are you getting out of it? Is if
You know what? You make an excellent point, and that's something actually I wanted to address. And the thing is that that's part of the thing is that I do a lot of editing. I have the problem is I run Bookmap on my laptop, and I need to hook it up to a secondary monitor to actually be able to record properly. And I think the last one I did, that particular video that was done with was 4 minutes long, was actually done on my laptop. So the resolution sucked. And so basically, instead of getting a range of like being able to see 12 or 13 points, and having like a big view, you only see in like 4 points. And so, yeah, it was very congested. I felt claustrophobic even watching my own video after I watched it back. So yeah, it's something I'm definitely going to address though.
yeah, I mean, try. I mean, the point of the content in here is that you get something out of it.
Yes.
And whatever, if a video and you're walking yourself through a video and you are like last time, great. This one was really cool, but how much did it help you is the question. And maybe it did help you a lot. I don't know.
Yeah, like I said, I'm growing on it. So it's like I said, I got like two different fronts kind of working at the same time. One, I'm trying to use the video as a way basically to archive the entire. I don't want to archive the entire day and then locations and then basically be able to get all the information. And if I want to look back on certain setups, I want to be able to have everything bookmarked. And then what I'm going to do is I'm going to sort everything, from bookmarks as well, but actually put them in different specific folders on YouTube so I can look for specific setups and I can go to the bookmark and then just rewatch the entire thing. And that way I can just get that pounded in my head. And anybody else could actually follow that too, which would be pretty handy, I think.
Yeah, cool. Let's move on. Thanks, JYF.
Thank you.
And Rob, you're next up, and let's jump in. So
Okay.
slow down. Tell me what to do here.
So open up Rob's image there on the left. So this is the image Rob submitted. I think we're a little zoomed in there. And I just like overall, Rob, I mean, you're putting in a ton of work. You're always putting in a ton of work, and just keep up with it. It's fantastic to see you using the checklist. It's fantastic to see you drawing the arrows and actually measuring the setup. That is a necessary step to progression and consistency. So this is what you've submitted here. Now, I took the liberty of scribbling a few lines on your image, and I added it to the Notion document in a separate file. Bruce, if you want to pull that up. If you close out Rob's image, there should be another one right next to it. Yeah, and so what I've done here, so primarily, I'd wanted to ask you, where are you measuring the impulse from? This is something we discussed, in a previous webinar. Are you measuring from the breakout of the consolidation range? Are you measuring from where you see the volume increase? Are you measuring from the opposite end of the consolidation? Now, ultimately, it doesn't really matter. What matters is that whatever you determine, you should stick to measuring the pattern that way. Now, if you start measuring it the same way all the time, you're going to see more consistency, and you're going to your analysis will then provide you with a different set of expectations, especially within a measured move. So what I found from my efforts is that if I measure the breakout from the top of the consolidation range, or in this case, it would be the bottom of the consolidation range, the measured move tends to play out a lot more accurately than if I just pick a random spot within the consolidation, or if I pick where the volume increases. Now, again, this is just me, so you do whatever you want to do, but whatever you choose, try measuring it the same way all the time. So where I found, if you look at the schematic down below, that was the one that was provided from Bruce in the Education Center, and you'll notice the impulse move does begin at the top of the consolidation range. And so what I've done is I've redrawn your image. If you start measuring, number one I've added is the consolidation range. Number two is where I consider a breakout of it. and you'll notice it coincides with a lot of volume on the delta bars down below. It does move into liquidity and it has absorption around 3. So basically what I've done is I've looked at your same flag pattern, but I've looked at it in kind of a smaller move. So rather than grabbing it from, the top of the consolidation range, I'm measuring the breakout of that consolidation range. And then we see the pullback. The pullback is supported by, some liquidity, and it's kind of hard to see at this point. That's kind of where I have number 4. But when the sellers come back in around number 5, we get another measured move right into a liquidity target, which is number 7. Now, this isn't the most profitable trade. Obviously, I could have said, let's just get short at the top and let's dump it at the bottom, and yeah, you'd have a lot more profits. But what I'm more focused on here is the consistency. Define how you want to measure it, and then measure it the same way until you're given a reason to change that. And when you are given a reason to change that, factor that into your analysis. Consistency creates confidence. Confidence creates better execution. And I love to see the checklist. I love to see you working on the flag pattern. When Bruce brought that in, I used to trade the flag pattern when I was first getting started, and then I gave up on it because it just didn't make sense to me. And then seeing it presented this way with the liquidity picture, and then starting to measure from the top of that consolidation range, in this case, the bottom of the consolidation range, I found the measured move is way more accurate. And more often than not, it does line up with a liquidity target. So let's see if I have anything else here. Yeah, again, these comments are not about how to have the most profitable trade in hindsight, more about just kind of refining and creating a more rigid system and keeping that system consistent so that you're measuring it from the same points all the time. I'd say, lastly, keep up the good work. You've been putting in a lot of work for a long time, and I hope you feel like you're making progress. Feel free to message me if you have any more questions about the flag pattern, because I went from just studying it to trading it, and now I actively trade it on a regular basis, and I enjoy it. It's a big part of my setup now. So that's kind of the gist of it.
All right. Thanks, Slowdown. I'll keep all that in mind as I continue to work on all this.
Rob, so I'm curious, we kind of defined a couple weeks ago, just focus on, marking up your setups. Has that been helpful?
Yeah. Some of these tags, I'm just putting them in kind of generic places. I'll just type these out, the little white boxes, and I'll drag them to where, like in this image, I'm not really putting them at a precise point, or I would probably use arrows to point them exactly at something. I'm just trying to, a lot of times I'll go back and replay when I'm taking these. And, I'm just trying to get a general idea. Some of them, to me, just seem like they're sloppy, and, but I'm trying to look for some sort of flag pattern that happens at all during the day, something that looks close enough to it to where I can say, well, here's, something close enough to it.
Yeah, it's it is going to be sloppy throughout the day, right? You might get a couple of these a day, but like we were talking about with JYF, sometimes knowing when to sit out is more important than knowing when to engage. And I really do feel like if you start measuring that impulse from the exact same location every time, it might start kind of piecing itself together a little bit easier. Like I said before, I'm a huge fan of the rectangle. I draw rectangles all over my chart. It really helps me kind of have my own roadmap. And so when I'm looking for a flag, I've already got a rectangle on that consolidation period, and I'm looking what happens when it breaks. Again, the spring setup I've posted over 200 times in the book, a rectangle on it. This move begins with a rectangle. For me, I don't know, maybe I'm a little slow, but the rectangle just kind of puts it all together for me. And so I look at the behavior. What happens when we break that rectangle? Do we impulse out of it? Do we get the continuation? Do we absorb and pop right back in? And if we break out of the rectangle on strong relative volume, all of a sudden now I'm starting to look at the pullback. What happens next? But until we break out of that rectangle, I'm just hanging out. So you can you start to it starts to become second nature. But really, I don't know. I would feel like I'm just kind of rambling now.
Yeah, I'm still trying to figure out what all of my criteria is exactly so I have a repeatable thing. And I'm not quite there yet. So what I've been doing is just trying to find these images and just dragging those labels onto it and watching it throughout the day, thinking, what would I do here?
Right.
And I mean, to me, it's just my progress is just uh, incredibly slow with this. It gets very frustrating. I've been at this for pretty long time, so I'm still working on it.
Yeah, well, I think the quickest way to increase is your consistency, or sorry, the quickest way to increase your efficiency is by increasing your consistency. So the more, when I draw these arrows, for instance, when I'm doing these flag patterns for myself, when we get the first impulse out, I draw both arrows right next to it for the measured move. So in this example where we've got the red arrow at number 2, when I'm drawing this, I'll draw 2 arrows right there. And then I'll drag the other one over to where the sellers come back in after the pullback. And that's my measured move. I keep it really simple. I think as traders have a tendency to overcomplicate things because there is a lot of randomness in the market. Where price ultimately goes is not always random, but how it gets there certainly is. And so we want to throw around a bunch of buzzwords and start talking about all these factors that we've learned about and read about in books, try to make sense of it. But sometimes that just creates confusion and it doesn't really help anybody. So I'd say just try to pick where you measure from and keep it that way. Keep it that way for a week or two until you realize that you're doing something, that maybe if you measured it from a different location, you'd have a different set of results. But I basically measure mine exactly like the diagram at the bottom of this image here. And it's been working out pretty well for me.
Yeah, I'll try to keep that in mind. Some days it's just hard for me to find anything, and I'm trying to, stay consistent with, having something to post that looks somewhat like my pattern, just so I'm staying consistent, trying to do it each day. And a lot of times I'm thinking, I don't know if this is quality stuff that I'm putting out or if it's particularly helping me.
Yeah,
You know,
my
but
last comment on that is like Bruce has mentioned time and time again, the academy only makes sense when it's helping you. At the end of the day, getting free Bookmap and getting to hang out with other members is great, but it has to be helping you. And if it's not helping you, then something needs to change. Regardless of what you're doing, it's got to be there to serve you first and foremost, and in turn, it will then serve itself. I can't stress that enough, how much my trading changed when I forced myself to draw out these schematics and I forced myself to create a checklist. And the checklist I use now is not the checklist I used 8 months ago when I started drawing these patterns. But basically what I did was I put myself out there. I was like, okay, well, I'm going to have to trade this pattern and I'm going to draw this pattern. So I'm going to know exactly what it's like. And when I have that schematic up all the time, and if I don't see it developing, I'm not looking for that trade. I mean, the reality is when you go out there and you kind of put yourself out there by making these drawings and making these checklists, you can't really curve fit after the fact. It does kind of force you to play by a more rigid structure and rigid system. And that's harder initially, but over the long run, I can only speak from my own personal experience. it completely changed how I view the markets and allowed me to be a lot more relaxed in between setups.
Yeah, if I can just have an exact set of criteria and I know what to do, then then I'll have the ball rolling a little more. I'm not even to that point yet where I know exactly what I'm looking at to get in the trade so that I can just do the same thing over and over and over and test it, see what my probabilities are, see do I have an edge or not.
Yeah, well, the other
So
thing to keep
I'm
in
at the
mind,
pre whatever you call it, I'm at the phase where I'm going, what are my criteria even, and that's where I get all jumbled up as, what the hell am I even looking for here?
well, the more times you document it and the more times you draw it out, the more you'll be able to fine tune and adjust your criteria. So, like what you come up with right off the bat doesn't have to be what you're using in 6 months from now or in 2 months from now. Um, like to be honest, like the flag pattern down below, that image from the Learning Center, and then that's just a checklist I made based on the video when it first came out. Like that's kind of where it starts, right? Now, like when I see this flag pattern developing, like I'm not even looking to enter until number 5 on my checklist, right? But I'm drawing rectangles all over the place. So I've already got a rectangle for number 1. And when it breaks, if it breaks on volume, then I start thinking, okay, well, what's next? What's the pullback look like? And all of a sudden, like it goes from, sure, it's 7 steps, but really like it starts to kind of feel second nature. And sometimes you enter on number 5 and you get taken out and you think like, oh, well, that didn't work. Like, what did I do wrong? And the reality is maybe you did nothing wrong. No trade is going to win 100% of the time. But the more you document this, the more times you see the pattern repeat itself, the more confidence you'll actually have to enter when the time comes. And you accept the risk, because you kind of have a predetermined measurement from your first impulse in this particular trade style. So you kind of know what you're risking and you know what your reward could be. And then it's up to, it's up to the market at that point. Like you can't control it.
Yeah, the randomness kind of keeps me from having a consistent thing because, I'll get a loss and then I'm like, well, then it just causes a bunch of doubt as to whether I was looking at any of the right things in the first place.
Well, is there any part of the checklist that's written down below there that you don't understand? Like, not to put you on the spot, but is there any one of those 7 things that you need a further explanation on?
Let me see. Well, I don't know precisely what I would call trapped traders or, let's see.
Simplify then, just call it consolidation. If we have a consolidation range, there are people who are going to be long near the top. There's going to be people who are short near the bottom. And those become trap traders once we break out to the opposite side. So like, just simplify it. Just call it consolidation.
Yeah, for some reason, I think trap traders, and I'm thinking, oh, I need to look at something going on with the heat map versus the
Well, if you think about
or the dot
consolidation,
graph.
if you think about consolidation by nature, it is kind of a tug of war, right? It's going back and forth and back and forth. And there's people getting involved on both sides. And that's why we're not breaking out. So like in a consolidation period, there's naturally going to be trapped traders. So like you could remove that term if it helps clarify anything, just call it consolidation. Do we have a period of consolidation? Some people will say consolidation is like a coiling effect, like a spring winding up a bunch of energy ready to release. You could call it trap traders. You can call it whatever you want, but don't confuse yourself over the terminology if there's a way to simplify it.
Yeah. Yeah, sorry, I'm not so fresh right now. This is kind of the day where my brain is kind of fried at this point. I kind of wish we did these a little earlier in the day. So I'm trying to keep up with everybody. This is kind of the part of the day where I usually take a nap at this point. So yeah, yeah, sorry if I'm a little bit off right now. But yeah, I guess that's some good input. I don't want to take up too much more time. Appreciate it, guys.
Okay. Yeah, Rob, maybe we'll talk tomorrow during the webinar. But I was trying to get you kind of hooked on relative volume since it's such an easier thing to see. But let's chat tomorrow about it. Let's see. Slow down. I think you had some more that you wanted to go over.
Yeah, I'm actually going to skip it for today because I think we've already taken quite a bit of everyone's time. I had a small little rant that I was going to go on, but maybe I'll save that. I'll just quickly say this general advice. Bruce has been saying this now for a few weeks. Go ahead and create that checklist and or schematic and force yourself to put your ideas into a more rigid and predefined plan. It's hard to put yourself out there. It's hard to define your setups, but highlight actionable and repeatable behavior and focus on that. What is actionable and what is repeatable? And be consistent and hold yourself accountable. Like when you create the system for yourself, not only will you learn a lot more setup, but you'll learn a lot about yourself. You'll learn about how willing some of us are to bend and mold our view around us to see what we want to see instead of what we actually see. And we kind of fudged reality. This was literally my turning point as a trader. It changed my consistency, it changed how I viewed the markets, and it changed how I behaved while I was waiting for a trade to set up. Then to summarize that, refine your process, reduce the inputs, refine your process, reduce the inputs, and repeat. And it'll just get easier and easier. That initial step of putting it all out there, creating that checklist, creating your schematic, like it's hard because then you can't say, oh, but in this one time, this thing did that. And oh, this time this did that. But normally it does this and it does that. Just like, my advice to all traders, create that checklist, create a schematic, memorize the pattern. The more you know it, the easier it is going to be to execute. And I'll save my rant for another time.
Okay. Excellent stuff. Thank you so much, Slowdown. And thanks, guys. Rob and Rob, it looks like you guys took the same trade setup. But anyway, let's move on. And we are kind of out of time, to be honest. Usually we try to keep this to an hour, but we're on such a good discussion here that I thought let's keep it going. Let's see. I had a few people to go over in line here. I had Donkey, Steven, and Crash. Guys, I know you guys. I think what we'll do is I'll just go through it. I think quickly, and we'll go over you guys again next week. All right, so we'll kick it down next week. And in fact, why don't we just do that? This was such a good discussion. I don't want to mess it up. So we'll go over your guys' stuff later next week. It's been a while since we've gotten to you guys, so no problem on that. I will put this into the chat as well as slowdowns and also Stan. Stan had some feedback from let's see, or for D&T Matter, for Caesar, and also a new guy here, Nirav Sony. Anyway, welcome to the Academy. Yeah, let's wrap it up, guys. This was really nice. It was a very more in depth, and we opened up the mic for you guys, but we'll get to the next leg later. next week, if it's okay with you guys. Let me know your thoughts on that. What do you guys think? Yeah, I feel bad to cut you guys off, but it's just we've already gone over an hour. Okay, all right, Crash. Yeah, I know haven't gone over you for about 2 or 3 weeks now. Also Donkey, but some good stuff in there, guys. And you guys are very, very active. Much appreciated. Okay, so let's see. I don't think there's anything else to go over. I will put the links in here into the Bookmap Academy for you. You guys can get access to these Notion files here, so that get some feedback, and then I'm happy to explain it to you as well. Okay. All right. Well, thank you so much, Slowdown. Really, really nice session. Thank you, David. Thank you, Stan. Jack, we missed you here, I think. Yeah, that's it. Anything else that you wanted to add, Slowdown?
No, I hope I didn't take too much of anybody's time. I'm going to spend the next few weeks away from the markets. I'm going to hide in the shadows and search for Neverland. So, thanks for allowing me to spend this time talking with you guys, and I'll see you in a couple of weeks.
Yeah. All right. Well, yeah. Thanks again so much, Slowdown, and we'll everyone will meet up next Thursday. Slowdown will be off, but we'll rotate some of the other coaches. Thanks for coming, everybody. Have a great rest of your day, and we'll see you tomorrow, and that'll be Friday. Okay. All right, guys.
Cheers, everyone. Take care. Thanks a lot. Bye-bye.